But if you're buying a property, let's say in the middle America for $100,000, and what we just described, and the average rents in there are actually higher than what you're requesting, you have a much better chance at being able to keep that occupied. Even if you get into a crash situation, where you have to, readjust your rents a little bit, but the mortgage is always paid. It doesn't matter if you make cash flow as long as the loan is always paid, right? So if that's the situation, then that's when I encourage people to move forward. But if you're in a situation where you have to speculate and you have to work your ass off to get somebody to occupy it, well, then you're in a bad spot.
This is the real estate investing experience. We get it. Real estate can be rough sometimes, and that's why we bring in the experts to talk about the experiences you won't hear anywhere else with your hosts, John Cohen and Chris Grinzik.
What's going on, guys? Welcome back to another episode of the Real Estate Investing Experience. I'm your host, Chris Grenzig. With me, as always, is John Cohen. How's it going, bud?
I got no complaints. Hanging in there, getting ready for Thanksgiving. Hopefully it goes off without a hitch with everything that's going on today, but we shall see.
Yeah, it's going to be interesting for people that don't know or don't follow me on social media. I'm going to be moving to Florida, doing some other stuff, and I'm probably going to be driving down this weekend, so I'm curious to see what the traffic is going to be like, if anything. So it'll be an interesting take. I don't know. I saw the past weekend was down for like flights, but I know obviously, Wednesday is a big day, and then that, Sunday, Monday is another big day. So I'm curious if there's going to be a lot of people out and about. And then two, if people are going to just be driving way more than flying, or if it's just going to be down in general. So I don't know. It'll be interesting.
That is, it's a good point. I know people aren't traveling as much flight wise, but driving wise, people are doing more things. So the question becomes, is traffic even more brutal?
Mm-hmm.
I will say that, our normal Thanksgiving, a lot of people are not coming, and that's just close family members for a plethora of different reasons. So I'd be interested to see if the world complies with what they say we should do, whether anyone believes that or not, or if it's just complete disregard and mayhem. So I think only time will tell, which is a pretty classic answer, but we shall see.
Yeah, I do think it'll be less, just because I saw there's a bunch of people saying like smaller turkeys are in demand this year than over like your typical like massive 10 pounders or whatever the hell people buy. I don't even know. So I think that's probably a pretty good indication of the route people are going. I know, we were supposed to have a smaller dinner with normal family, and then we actually just changed it to just me and my mom are going to have dinner, and I might visit, pop over family, just here and there and stay away. So I'm sure there's going to be other people doing the same thing and not traveling. So I got to imagine it'll be less, but to what degree, who knows? So it'll definitely be interesting.
Jury's out. And it didn't help that, we both ran into a potential COVID issue at the office. So we've been getting tested.
Yep. Luckily negative so far. So that's good.
As am I. I will go again tomorrow to find out, but we will, that is another thing that has changed some plans. People don't want to be around me, which they
don't
say
think that's any different than usual.
But I think it's just me, right?
Yeah.
What's the common denominator? But
exactly.
Be that as it may, we shall see.
Yeah. Awesome. No, I'm excited for it. I'll get a good day off, but then I'll be right back to the grind, and then moving's going to be fun. But with that being said, let's jump into today's episode. I think we're going to have a really great guest on today, someone who's not going to be afraid to speak his mind and, get into the weeds of things and maybe say some things contrarian to what some other people would say on a podcast. So I'm excited for that, and not to put any words in his mouth, but excited to have a conversation and see where it goes. So with that being said, Aaron, thank you so much for coming on.
I appreciate you letting me on, Chris. And with that little intro, it's kind of hard not to feel the gauntlet's been dropped, right?
That's all I was doing, just putting the pressure on early, right?
Let the fur fly, man.
Yeah, exactly. Look, got to give the people what they want, right?
There we go. And people they don't like to, and from what I can tell, just for the people I spend time around, maybe like John has experienced, some people don't come around you because maybe you're too colorful. But ultimately, I don't have time to sugarcoat. I lost my sugar shaker years ago in the industry. I just got to tell people how it is, and if they don't like that, please go elsewhere. I go for the no, and if they say no right away, well, I don't have to get the no later. I don't have to burn up that time of theirs and my own.
Yeah, I do think even still, even if people don't agree with you or don't want to hear what you're saying, I think most people respect it in some way, at least, even if it's not in that instant. At some point in the future, they'll be like, hey, he at least he told me how it was. He didn't try to fluff around. It didn't try to hide anything. I think most people respect that. So I think that's why we try to do it as well. And, I'm excited to have you on.
I had a recent conversation with a business leader here locally in Arizona on my YouTube channel where he said that same thing. You get the no once, but when they come back around the second time, it's a definite yes. Because if they walk away from you saying, yeah, I don't want to have anything to do with that guy, then they already set that the only reason they're going to come back to me, the only reason they're going to interact with me, because they have a need for the services that I provide.
Yep.
Right. So it actually works out very, very well to get that, find that friction point between you and the others, because that's where when you come back around, it works out better for everybody.
Yeah. 100%.
So I had a similar conversation. I had almost a 2-hour conversation this morning with an equity partner, and there was lawyers on the call, and they're invested in one of our deals. They're trying to get into another one, and we're going back and forth on these little points, and I just think I should have got off the pot. Like, come on, like what we keep having these calls, all we're doing is costing each other money for no reason. But you're right, just get to the point. Are we doing it or are we not? Because it doesn't make sense at this point. So I can appreciate that 100%.
Well, in fact, that's kind of the title. In a way, it leads to the title of my YouTube channel. So it's youtube.com/quit jerking off, because that's what you're doing right there. I mean, guys, we're sitting here jerking each other off. We're not getting to the point of where we're going. What are we going to do? So we need to cut the play and execute, and that's what's necessary. And so that's where I'm trying to give everybody the best information I have, so you can make your own damn decisions. I don't make them for you. You have to make them. You're the CEO of your real estate investment business. I'm the guy who does the finance piece. That's just the product I produce. But in reality, I'm supposed to just hammer you with the best data I have from decades of experience for you to make decisions based on practical data, not speculation and theory. But you need to make it. You need to own it. You need to stand behind it. And when you dick it up, I'll help you dig out from underneath it. I'll do my best. But at the same time, you got to realize where your mistake was, make the correction, and keep moving forward. Don't lay down and lick your wounds and be like the rest of them.
100%.
100%.
I think at this point, we've done a fantastic job of weeding people out who are either going to love this episode or hate it. But let's back it up half a step. Aaron, can you just tell us a little bit about you, your story, your background, your journey, et cetera?
The journey is an interesting one, where I sit today. So I'll start with where I'm at very briefly, but I'll lead into it. So where I am today is I finance investment real estate in the conventional lending space. Like your banks, your Bank of America, your Wells Fargo's, your Chase, you're those kind of guys, right? So I've been in this industry since 1997, but I work at a smaller firm, it's still a national firm, but they're not as widely recognized as a big bank, because we don't do checking and savings accounts. We're financed. We do mortgages, the loans for people to buy houses, and then we have a life insurance firm and some other ancillary companies. And I'm not an owner of the company. I'm a team leader of my own little organization within the company. So it all kind of got going as far as any sort of business or entrepreneur landscape for myself was high school. I was working in my family had a cattle ranch, so a very, very simple business plan, right? You got to breed it, you got to birth it, you got to grow it, you got to sell it, and you got to do it again, right? It's a very, very simple thing when it comes to cattle ranching. From there, I went to the oil fields of Wyoming. From there, well, actually, I kind of had another little business in school. If I want to back it up to high school, I mean, I cheated my ass off to get that C. I never really did anything on my own, and I figured out how to pick locks and figured out where they hid the test answer keys for the entire math department. And I was able to produce those, sell that, get people to do my homework. And I didn't have to do all that crap. I went hunting and I went snowboarding and four-wheeling. That was my life. Except for ceramics and auto shop. I loved that. I loved football. I loved doing that kind of thing. But fast forward into getting out of high school, going into oil fields of Wyoming, working for a welding company, then working in running heavy equipment, driving truck. Then I ended up in the mines in northern New Mexico with my dad. And it was awesome. Family sold the ranch and he went back to mining, and the greatest job I ever had. 700 feet underground, playing with explosives. Who wouldn't want to do that, right? Running heavy equipment, drilling, blasting. It was awesome. Then they shut down the project, and I figured I'd get a job pretty easy. It wasn't going to be real hard. So I went ahead and came back to Arizona. My wife and my infant son was here. I'd be for 13 shifts gone, come back for 6 days. I did that back and forth. And then I couldn't find a job. And it got to the point where we're running out of money. And it got to the point where we're so destitute, we didn't have the capital to even buy diapers. My wife was able to get a coupon for free diapers at a store. As I'm heading to another job interview to get a truck driving job hauling landscape rock for $10 an hour, I pulled up there, did the interview. They gave me the same response I got from everybody else. I was overqualified for the position. So as I left there, broken at that point, basically shedding tears in my truck in that parking lot, I had to wipe my tears out of my eyes so I could see where I was driving out of there to try and find the store that had these diapers. My gas light comes on in my truck. So as I'm rolling up to the grocery store, there is a gas station outside of it. I pulled up to the station, I swiped my debit card, and I got a decline. So then, the overdrawn account was not going to let me get my gas. So I had to rifle through my truck to get some change that I found all over but underneath the seat. Then I started walking that parking lot for what seemed like a couple of hours, if I recall accurately. Finally got enough change to get a couple gallons of gas. Now, that was back in the late 90s when you can get it for 98 cents a gallon. Mm-hmm. If it was now, I'd probably be spending 2-3 days in that parking lot. Well, I got my gas. I went into the grocery store. I got the corresponding diapers with the coupon. As I'm walking out, I end up face to face with a guy who used to do all the office work and dispatch and scheduling at a company I used to dig swimming pools 4 years before. He asked me how things were, and I explained what I just explained to you guys. He invited me and my wife to get my wife and meet him at Red Lobster the following night, and he had a gift certificate for dinner, and he took us out. And there he introduced me to the lending industry. He gave me the business card for a mortgage broker and the business, or at least the branch manager. So I went ahead and reached out to the guy. He had me come in for an interview. I cut a foot off of my hair. I shaved. My mom bought me clothes, so I looked semi-professional. I went in there, and they started me as a telemarketer at the end of 1997. Well, since then, Forrest Gumping my way through this industry and working my guts out and failing and coming back up and failing. And then 2008 happening, and the market crashes and the industry crashes. And I got in a motorcycle accident, and I woke up with my legs shattered and a crushed rib cage and all this crap. And I had to come back from that with my memory gone, had to learn how to walk again and rebuild a business. Mm-hmm. But all these things taught me what I needed to know to come into where I'm at today. Where I'm at today is actually just as stressful and just as hardcore as it ever has been. But I come from it with ridiculous experience to the extent that I went from, in an industry where the average person, there's 300,000 people licensed to do what I do. Of those people, the average individual in it does between 3 and 4 transactions a month. If you're kicking ass, you're doing 10 to 12. I did 145 last month. This month, we could probably get 110 with the shortest month of the year of 18 working days, right? We've got I think we're close to 1,200 transactions closed so far this year. And it's just my sources, right? I've got a staff of 30 and it all funnels through me, which is a lot of intense amount of work that has to be accomplished. But the opportunity to give that many people jobs and then opportunity to continue to grow and improve their income and then communicate with a lot of investors to help grow their future. Because it's not about, my work with investors, which is exclusively investors. I don't do loans for your regular home buyers. It's a different dynamic I don't want to get into. But ultimately, the real estate investor, when they start to wrap their head around the fact that they are a business owner, that they're calling me because initially they're introduced to me because I do loans. But then they come to realize that anybody can do loans. I mean, when we talked about the big banks, they can take a monkey out of a cage, you give it a phone and training, it closes loans. When you're talking about real estate investment, that's a whole different thing. That they have to be careful how they go about it. Because if they treat it like a consumer spending money and going into debt, they're on the fast track to failure. They look at it from a business owner with a CEO perspective that puts the right people to acquire, rehab, manage, maintain, build, or whatever it is they do their business out there in different markets, and me helping them with practical data on how to make decisions about that business. They have a greater chance of success based upon that practical data.
Mm-hmm. I love that. I think that's a great story. So how did you then fall into not just doing, your typical residential loan versus working with real estate investors?
Well, they started coming into Arizona in 2005, buying houses because, in the 2003, actually, when everybody's buying residential real estate because you can sell the house a week later for $50,000 more. You can buy it for $10,000 out of your pocket with no income qualifying. They were just coming like crazy, right? So then at that point, my mom was a realtor out here. So she had all these clients coming from California. I'm like, well, let's just rent a limousine and drive them around and sell houses and I'll do the loans. And we were doing a lot of that. And that got out of hand. And then the market crashed, of course, right? Well, back when I came back from that motorcycle accident, it just so happened that I was working for Countrywide before that. Mm-hmm. Bank of America took over Countrywide. Then I went to work for Bank of America. And in my opinion, it felt like serving time for something I didn't do because the way they went about their business, the way I went about my business was vastly different. So I found an opportunity to work for a different company. And at the same time, I got 2 leads. One client come in buying an FHA, home using FHA loan from a local rehabber. Another person I worked with at Bank of America said, hey, we can't do that kind of loan. Let me send it to you. And it happened to be the same local rehabber selling the other house. So it was literally 2 clients at the same time utilizing the same product that other companies couldn't use. And the company I went to could do it. Mm-hmm. So I called them up, say, hey, I can get this deal done. They say, yeah, every lender says that, and no lender ever does. They make us rewrite the contract, wait the 90-day season period, yada, yada, yada. Well, I closed it in 30 days, both of them. Well, they called me up and said, can you come down to our office? So I went to the office. They introduced me to their team. Said, we want you to do every deal. We will have people, we'll introduce you to people. You got to win their business, but we'll introduce you to every single person who wants to buy a house from us. So I started doing more of this. And just about that same time is when your turnkey real estate investors started making their way into Arizona. So it's literally just 2 paths crossing that end up working out to work. Then I started getting introduced to those guys. Mm-hmm. And started understanding these aggregators that were bringing investors into Arizona. And then they went from there to Indiana and then on to Texas and then to Missouri and Memphis, Tennessee. And it just started growing. Mm-hmm. And so I started adding licenses. And it was not easy because the companies I was with did not understand my platform, did not understand who I was going after real estate investors. Average price was $70,000 house. They didn't get it. It's like you would make more money doing owner occupied here locally and stay out of that stuff. I didn't like local business. I live in Arizona. I can't stand it. I can't stand dealing with the realtors. I can't stand dealing with the buyers. What really shut me off to Arizona was the final straw that just broke it for me. Was that a client buying a home that claimed that their difficulties with their credit recently had to do with having to take an extensive amount of time off work because of a health issue with their son. Well, I'm like, well, give me the paperwork. We can make it work, right? I need the evidence to prove that it was circumstances beyond your control. They kept telling me they were getting it. I never did do a pre-qual letter for them, but they went ahead and went and contracted onto a house. This one was a bulldozer. She and her real estate agent convinced the seller to move out, let them move in. Not only did they move in, but they rehabbed the damn house. They moved walls. They put on a pool fence, all cash out of their pocket. And they're asking me, why isn't the loan done? I'm like, I'm still waiting on your medical paperwork. Well, it turns out the medical paperwork was the kid got a gluten intolerance. That was it. And dude had to take off like 4 days of work. Like, that's why your credit went to shit. That's why you couldn't make your bills work, because of this. And I was getting hate mail like you wouldn't believe because I wasn't getting the deal done. We got it done. We found a program we can make it work. It cost me a lot of money to get it done because we're losing. For them to qualify, the rate needed to be a certain point. So we were just taking a beating on it. Finally got it done. And did I get a thank you? No. That was the most miserable experience we've ever had. We're never going to work with you again. I'm like, I'm done. I'm done with homeowners that need to have the biggest, nicest, fanciest house on the street that they cannot afford, but it's their right as American to have it, and I better damn well give it, right? Mm-hmm. So that was it. And that was not like it was the only time. That happened a lot. And when it comes to people buying houses to live in, they always have this expectation. I can't handle it. Now, does that make it easier to do investors? No, not all the time, but I have a better relationship. I have a better understanding as to why they're buying the house, not because they can't stand their sister-in-law if she has a nicer house. It's because they can see the value in the real estate. And I understand the value of the real estate and the value in the financing. So we have a reason to work together. And if we don't have a reason to work together, it doesn't hurt us for a deal to fall apart. I never want them to, but when they do, I don't have a seller sitting in a U-Haul trying to make it across the country to buy their next house. I don't have a person sitting in the front yard trying to move in on a holiday. Mm-hmm. That's one of the reasons I couldn't keep doing that.
Gotcha. I think that makes sense. And I personally appreciate that because I think it speaks to, your self-awareness over time and understanding, what was right for you despite other people telling you differently or what to do. And I try to do that myself. And I think a lot of people should emulate that. So I think it's an amazing quality to have, and really interesting to hear how it progressed over, several years and getting to that point where it eventually fell, because I think you said one thing that I resonate with a lot, and that's the buying houses that are bigger and better than they can realistically afford. And one of the problems that I tell a lot of my friends and family and stuff, I say, people go get pre-qualified and they tell you the max you can go get, and then people go right up to the max. And I'm like, did you even take the time to look at it yourself and evaluate what you're going to be paying a month, how much you're going to be borrowing, what is your debt on how much you make and on your net worth? And like, did you even look at that? Or did you just go with what they told you and you thought it was a good idea? And so many people are just like, well, if they're going to give it to me, why wouldn't I take it? And I hate that answer. It just gives me chills because it's a large majority of people think that way. And it's so ass backwards to me. And I'm sure you ran into it all the time.
Well, constantly the lack of personal responsibility that we're experiencing here, and people are thinking that's opportunity. It's not opportunity. You're just setting yourself up for a greater failure down the road. And when they fail to understand that the country we live in was founded on opportunity and personal responsibility, and those things like you're just talking about right there, neither of those are involved anywhere. Right? It's literally marketing and predatory practices and baiting and people being suckered in by the bait and putting themselves in a lot worse position down the road. You see this as a continual thing over and over. Hell, just the refinances. I don't know if you guys ever paid attention to how often we have refi booms in the lending industry. I've been doing it since '97, so 23 years. I see them about three to 5 years. Every 3 to 5 years, you're seeing a refi boom coming, right? So let's say 4 years. What does the amortization table on a 30-year fixed mortgage look like in the first 5 years?
It's almost only interest payments.
Correct. All interest. If you can get people to accept this big, warm 30-year fixed blanket, right, and pay only interest for 5 years, right? So you've really not affected your principal whatsoever, but convince them somewhere in that 5-year window to refi again, take the costs, add it on top of the loan, for this so-called better payment, put them back into an interest paid period, almost exclusively interest paid period, and reset that now at a higher loan balance, who's winning? Mm-hmm. But if you get that person to stay in it for the entire 30 years and they continue to pay it for 30 years, right? A lot of people are thinking this is compound interest getting ready to kick my ass. It's really not, because we live in an inflationary environment, correct?
I sure hope so, yeah.
What would you say is the rate of inflation today based upon what the Fed says?
I have no idea, but I think the historical average is like right under 3% or something.
They're going to say you sub 2. Right now, the Fed said we're going to let it run hot around 3. But when you look at what the Federal Reserve factors into the CPI and the PCE, Consumer Price Index, and the Personal Consumption Expenditures Index, the two indexes they use to measure inflation, two, in my opinion, most mislabeled damn things ever in the history of finance, or at least in economics. They don't factor in everything we spend money on. They factor in durable items that don't tend to change in value very often because people don't buy them very often, right? What they're not looking at, what are the top 4 things a person needs to be able to survive? Just a human being to survive. What are those 4 things?
Housing, food, clothing,
water.
I was grouping that with food, but yeah.
So you got most of so food, water, shelter. So housing, clothing falls under shelter. Mm-hmm. Food and water are 2 separate things. So food, water, shelter, and then you have air, right? I think California is the only place in the United States that figured out how to tax air. We don't get into that too much in economics.
Sure.
But when you start getting to food, water, shelter, they don't factor those in. They don't even factor in taxes. So your food costs, have they gone down or gone up?
Definitely gone up.
Has your energy costs, your power bill or your water bill, has that gone up?
I would imagine so. I haven't been paying it long enough to really say.
They've compounded significantly. Yep. And then, of course, taxes, they don't factor in easy. And taxes continue to compound. I mean, you guys are in New York. You know damn well about what I'm talking about, right? So when you start looking at those things, the actual rate of inflation is probably over 10% nationally. New York are probably pushing 12. Northern California pushing 13. So what I say to my investors is, let's look at this from a perspective of, say, 7% inflation, because you're a little bit more discerning on where you spend your money. So when we factor 7% on that, we know the dollar is devaluing by at least that 7% per year in what you can purchase with it. Mm-hmm. Right? So if you have a 30-year fixed loan and you have an individual that you're putting into this property that you bought, and let's say you bought a $100,000 property and you put 20% down, and let's say you got an $80,000 loan for 30 years, $405 a month principal and interest payment with $200 a month in cash flow, $1,000 a month in rent. Does any of that seem unfounded?
The monthly payment I wouldn't be as sure on, but the rest of it sounds fine.
Well, I'm the lender, so I'm sure.
Yeah, I'm going to take your word for it. Yeah. You said it confidently enough. So for this scenario, we're going to listen to it.
So
That
I
makes sense.
have people write that shit down. If you're listening, you got to write this down. It's a $100,000 acquisition, 20% down, $80,000 loan, 1% rent to value ratio, which is $1,000 a month, $200 a month in cash flow, $405 a month principal and interest payment. So when you start looking at that, we get to raise rents to pace inflation, right? It's happening across the country. I think New York's the only one taking a beating on rents right now. And as far as Manhattan is concerned, I've heard as high as 17% declines, right? To keep people in
large.
It's been getting smoked.
Oh, yeah. And so those are skewing the national numbers. We get into the actual national numbers where you got your single family rentals going on. We're seeing about 3.6%. So let's say in this example, you raise the rent by 3%. So what is 3% of 1,000? That's the monthly rent on it. What's 3% of $1,000?
30.
$3.
$30. Nothing.
$30.
Oh God, John, come on.
You're one of the few guys that's excited about it. It's like, man, now I'm making $30. I'm making 10 times what I thought. Most people say 300. So, John's the conservative one. So $30, nothing awesome. It's a couple of lattes in Manhattan, right? So your rent went up by $30, but we were talking $200 a month in cash flow before, right? So conceivably, year one is $200 a month in cash flow. Year two, with the rent raise, it's $230. You just saw 15% compound growth in your cash flow every time you raise rents at a nominal 3%. Now, flip to the other side of it, the lender who put the money up. Mortgage-backed securities pools, filters through, right now coming from the Federal Reserve, now down to the borrower, borrows that money for 30 years. Do they get to raise that payment, that $405 a month payment for those 30 years? No, it stays the same for the entire 30 years. When you recalculate the value of every dollar when you make a payment on that loan and compare it to the value of the dollar the day you borrow the 80 grand to buy the property, you're not paying back the $80,000 principal. You're not paying the $65,000 in interest at 4.5%, which the rates are much lower than that now, but that's just a nominal thing to discuss. You're paying about $61,000 in change in actual dollar value over 30 years. So I tell everybody, you leverage high, you leverage long, you pay off slow. You don't let people talk you into refi for rate. You don't let people talk you into putting more money down than you absolutely have to because the rate's better. The rates don't matter shit, especially if somebody else paying it, right? You get to write off on your taxes if you do. Every time you refi just for a payment to go down, you've increased your taxable liability from increased cash flow for an investor. You've decreased your taxable deduction with a lower interest rate. So in reality, when you look at it from a business owner, it's a completely big, wider thing than what's my rates, what's my cost, and when can I close?
So let me ask you a question, because I think you tackled one of the main reasons that people refinance. One of the other reasons is obviously people have been doing it for a while, or they've increased the value and they can pull out equity to then go purchase more or do something else with it, whatever. Do you still think that that is a bad idea then? Is it a case by case, or do you still suggest to people, hey, stay in it for the long haul, pay it off, do what you got to do?
Being able to pull capital out of it and reinvest is the only time I really, really, really encourage refinance. Because when you can take somebody else's money and use that money to expand your holdings, why would you not? It's literally, when you, let's say you have your own primary residence, it's got a couple 100,000 equity in it. You pull that 200 out and you go and invest into, say, 20 properties. That's going to generate $200 a month. Is that 200,000 going to be paid for by somebody else? Hell yeah, it is. You got $4,000 a month coming in. 200 grand is definitely less than 400 than $4,000. You're probably going to you're talking somewhere around about maybe $1,000 a month. You're making money on somebody else's money. It cost you nothing. Not a single cent of that was yours. If somebody's willing to give me money for 30 years and accept less for it over that 30, hell yeah, let's go to work. But you can't just do that with stupid crap. Right? Can't go out there and just buy boats and buy cars. Remember the Hummer craze of 2000, mid 2000s? People refinance and you're seeing matching Hummers and driveways. Now it's not even looked at as a really high class vehicle anymore, right? So it's one of these things where if you're pointing it in the wrong direction, it's definitely wrong. I'll never encourage that. If you're pointing it for the growth of your future and expanding assets, generational wealth is what will come from it, then that makes a ton of sense. And I'll get behind that all day long.
Gotcha. No, I'm happy you said that. I figured that was the case because it is a hugely valuable thing when you can come in, increase the value, refi into some long-term debt, and then just hold it and go long. I think it's one of the best strategies. It's what I'm planning on doing with my property. It's come in, renovate the units in 12 to 18 months, stabilize for a couple months, refi into some long-term agency debt, pull out capital, go do it again. Because debt equity, in my opinion, is not the best thing unless you're sitting on tons of money. And if you just go buy deals and you can live life lavishly, nice little tongue twister there. You got to make your money work, and you got to keep it moving a little bit to make it work. So I was happy you said that.
Well, and when people wrap their head around and start understanding that leveraging a property for 30 years with conventional financing is not debt. It's the greatest asset in the deal. When you start understanding these leverage principles, and start realizing what it changes the dynamic of their business significantly.
Yeah, no, I agree. How many people, so one of the things that we've spoken about, we love debt. We use it on almost every one of our deals. But what I think a lot of people fail to realize is the risk component with debt and how it changes deals and reflects in that, leverage is great when it's going in your favor, but obviously leverage can be a problem when it's going against you. How do you have that conversation with potential clients, past clients, new clients, about the, potential risks, pitfalls, how to mitigate it, and things along those lines?
Well, you got to understand what you're putting your money into, right? If you're buying something that is going to be a very, very rarely used thing, right? Let's call it let's say you're buying that, you're going to leverage the hell out of that house on the hill that a small percentage of the population can occupy. You're limiting yourself on who you could get to try and pay that debt back for you, which is no longer debt if somebody else is paying it. But if you're buying a property, let's say in middle America for $100,000, and what we just described, and the average rents in there are actually higher than what you're requesting, you have a much better chance at being able to keep that occupied. Even if you get into a crash situation where you have to readjust your rents a little bit, but the mortgage is always paid. It doesn't matter if you make cash flow as long as the loan is always paid, right? So if that's the situation, then that's when I encourage people to move forward. But if you're in a situation you have to speculate and you have to work your ass off to get somebody to occupy it, well, then you're in a bad spot. You've narrowed your playing field. You have a very, very wide playing field. I briefly mentioned Memphis, Tennessee. That place has got 52% of the population rents. If you're a place where you're cash flowing $200-$300 a month, you can drop it $100 a month and be the cheapest guy in the neighborhood for rent. You'll always be rented, and you'll always cash flow something. Then there's no real risk. There's always a risk, but the risk is heavily mitigated. If you're going to a place where you are buying the lake house, that you have to be able to have an environment where people are going to want to rent that for the weekend and pay a stupid amount of money to be able to meet your needs, then there's a potential risk there, just because look what happened with COVID. You had a couple months there and nobody was going out there and renting these properties. Yeah. So these owners were now in a pretty rough position.
Yeah, you flirted with something that I think is super important, where you talked about, cash flowing 200 a month and being able to drop it. And it's one thing we look at on every deal, and that's like our break-even occupancy. And that's, okay, how much does my income have to fall on a percentage basis so that I can cover my expenses and my mortgage payments? And we have certain metrics that we have to look for, but I encourage everyone to look at it for their own deals and just understand what that number is, depending upon the deal and the type of debt that we have. But your more conventional stuff, we're usually in the 70-ish range. Sometimes you get up to 80, sometimes you drop a little bit lower, just depending upon how great the deal is, what the rate is, what the business plan is. Some years are better than others. But it's super important for people to look at, because it's not only a reflection of an income dropping, it's also a reflection of expenses increasing, whether it's taxes going up, insurance going up, some extra repairs you may or may not have foreseen, which happens, especially if you're buying older stock properties. Maybe management goes up. I mean, there's a ton of things that you can pay for that can go up. It's a reflection of both. How much does expenses go up, income come down? So I think it's hypercritical to understand that going into it. And if you're nervous, it's the same concept of buying a house that you can afford. Just take a little bit less debt. I think so many people, especially on the investment side, get a property, they find out what the debt is, and again, they take the max without properly evaluating what the potential downside is, because all these properties have a downside. People still do get foreclosed on. They didn't do the proper inspections. Things happen. And you can lose the house, your equity, and potentially end up owing money. So I think it's super important to be able to understand the relationship between what can happen with income and expenses and how it reacts to the mortgage and how much you have.
Agreed. Agreed. Yeah, I say, and you definitely have to understand all those angles and be in a situation where you can reasonably predict. I mean, it's kind of hard to fully predict. You got to reasonably predict it by looking at the metrics and understanding what's driving that particular market and that part of it. Trying to mitigate as much risk as possible, but you'll never mitigate all of it. But that's where having more than less is going to help you. Having be able to spread that risk over multiple properties in multiple different markets.
Yeah. I want to clarify something too, because I know a lot of people that go based on like the how much the unit makes per month, right? Like the $100, $200, $300 per month. It's not a bad way to look at it, but in my opinion, I think it is better just to look at it on that expense range, because the example is yours perfectly, right? Use the $100,000 home, 1,000 rent, $200, $300. That's a really healthy range on your income. But if you start talking about houses that are renting for 1,500 and 2,000, well, that $300 is a totally different percentage of income than if you have $100,000 home or a $50,000 home, or you're renting for 500, 1,000. So I know a lot of people are like, oh, my goal is to have, 50 doors that cash flow me $100 a month. That's great. I think people need to be careful that, that's a good way to back into a goal you want to get, but make sure that 100 is a big enough cushion that if something happens, you can afford to squeeze it. So if it's a $2,000 rent, maybe it's 200, maybe it's 300. I don't know the math off the top of my head, but just look at it. I would just say, look at it both ways, both on the dollar per door, as well as a percentage of income, because you may be surprised at, the difference between one property versus another, especially if they're very different rent ranges, very different prices, et cetera.
Well, that, and you're also the team that you're working with, the people that are helping you manage it. If you can have, the shittiest house in the town, and if you got a great team, it stays rented and stays cash flowing. You can have a house built out of solid gold brick looking over the bay, and with a crappy team, you couldn't get anybody to walk in the house, save your life. It's a matter of what your personnel. You got, again, back to the CEO schedule of this thing, right? You got to have the right people doing the right jobs for the right outcome.
Mm-hmm.
Sometimes it doesn't matter what the asset is. You still have to understand the fundamentals, but if you got the great team and the great environment, then it tends to work out. And set your baselines, like you said. Maybe it's $100 a month. Me, it's $250. But set your baselines and focus on those baselines and make sure that they work.
Mm-hmm. No, I love it. You just started talking about a team and stuff like that, and I think where I want to go next with this is, obviously you've built up pretty incredible business and a team behind you. Would love to touch more on how you were able to scale from wherever you started out with probably just yourself or a few people, doing, like, I would imagine that 3 to 10 transactions per month, like you said, the average was, and scaling it up to over, 100 plus transactions a year. What was that process like for you, the timeline, and, how have things changed for you on the day to day as you've kind of changed your scope of work, I guess?
So really where it started to go was I had one person work with me. Her name's Ellen Schmidt. She's still with me 10 years later. It was just the two of us working together in the office. We had a big office available to us, and we parked ourselves into the space with no window, put 2 desks in it to where we could face each other, and we just worked all the time. And sometimes at that time, we were sometimes coming in at 5 a.m. and leaving at 8 o'clock at night. It was just getting it done, trying to just make sure we were performing as we said we would. And I found myself in Chipotle getting a burrito getting lunch for the two of us. Mm-hmm. And as I'm inside Chipotle, I'm looking at this, at the massive line of people out the door. And I finally got inside the door, and I had time on my hands, and there's only so much you can do on the phones at this point. And I'm watching the people behind the counter. I started counting the different heads, and I realized there was 11 people working at Chipotle. Like, why do they need 11 people to be efficient in burrito construction when there's only 2 of us doing intricate financial instruments like real estate investment loans? Mm-hmm. So as I started watching this and I started analyzing, I decided I need to build a model just like that. And I started in my mind building this model that mirrored Chipotle, which is an assembly line process. And so now I've got people when they contact me, there's a process that they follow, and there's steps that get to the construction of their loan, and individuals that they have to interact with during that process. Just like Chipotle had 11 people, but they only interacted with 4. Same thing with my team. I have 30 plus people, but each client will interact with about 4 of them, maybe 5 sometimes. The reason they'll interact with those people is because they need different people at different stages doing different things to be efficient. Now, occasionally I get people frustrated. It's like, I thought I was going to be dealing exclusively with Aaron, and I had to deal with this person. I didn't like it. I'm like, well, Go to Chipotle and talk to one person. Once you're going to walk out with, you're going to walk out with a rolled up tortilla. That's it. Because you didn't talk to anybody else about building your shit. So with us, you got to do the same thing. You got to build into this succession. So that's where it all started, was really just sitting down and writing out what I wanted. So I was in an environment where I was getting recruited by another company, and they wanted to know my 5-year plan. Never did that kind of thing before. Never thought about writing anything down. I heard about goal setting and stuff. I thought it was hokey. But what I did is I wrote myself a letter 5 years down the road describing what I wanted. And I long bombed that thing, right? Something beyond anything I thought was possible for myself. Because I really kind of pigeonholed my business, stayed fairly consistent. I accomplished that and then some in that 5-year period. So now I've written other things. The background you see behind me was due to something I wrote down, and bam, I end up with this 2 cabins built in the 1800s on 7 acres of Ozark property because of something I wrote down and some things went sideways in my business that led me to this need that I fulfilled with these 2 places, which are now my offices in Missouri. And now I describe that, actually, just if you're if you're curious, I described that in a little book that I put out. I've got 4 of them published. I've got 7 of them written, and 3 of them being done right now. I've actually written a lot more than that. I wrote 300 plus pages, but we're sending them out chapter at a time with purpose and with the cover wrapped around that one specific lesson. So people will get through that 30 pages and go on with life, not sit there and never make it through the 300.
Got it. No, I think it's interesting. And I love the way you broke that down of like the assembly line process, or like having everyone in their specific steps supporting, and you have your front office and your back office. I think it's a really powerful image because, I love Chipotle, and I'm sure there's a ton of people that have gone and will be able to resonate with that. Was there anything but I think what I want to get from this is I'm sure there's other people that are in similar situations or are aspiring to similar situations, but that may not be the easiest thing to do, is like sit down and be like, okay, let's delineate roles, or let's delineate responsibilities, or, break down our process from beginning to end. Was there anything that you did that you found especially helpful as you went through that process?
Getting my key team members together to do that. We had the opportunity where I had a partnership that dissolved in November 2015. And I had to start over at zero again. I had 3 team members, and we just sat around the table and said, okay, what do we want this to look like? And we started building it again from the same platform of the Chipotle thought process that I had in 2014, but now with a little bit more knowledge, and with these 3 team members instead of just 1. And we started building it out from there, and it started to outgrow us. And we had to add more people and beg for clemency and all these things. So slowly it just started to work. Now, is it perfect? No, it's constantly being tried. It's constantly getting beat on. This mess with COVID and the rates and all that stuff is just avalanching us right now. I got nearly 600 transactions in process right now that we're trying to keep up with. It's insanity. And, a lot of people say, well, why don't you just slow it down, quit getting more deals? I don't know how to slow it down. I'm trying to slow it down. But when somebody applies, I legally have to process the deal. I only have so much capability, and yet we're getting crushed. And so now you're learning what you've already built, a massive organization. How do you expand it? And how I do that is basically just getting control of me. You can't control anything else until you learn how to control yourself. So that is getting up every morning at 4:30 at the latest, going to my spot, grabbing what I need to have to sit down and read specific things to feed my mind first. I like to say, when people ask me how things are going, I say, I'm just staying barely out front of that big foot trying to kick my ass every day. And there's a lot of truth that for everybody, you get it, depending upon when you get up, depends upon how you get your ass kicked. Because in my opinion, the big ominous foot that's out there wakes up at 7:30 in the morning. A lot of people like to get up at 7:45 and then trying to get out the door and get to work by 8. You're already getting your ass kicked. Get up before the foot does. You dictate what you do with your mind and your time early, while the rest of the world is doing nothing and accomplishing nothing. That's what really, really made the difference, is when I decided in 2015, wake up at 4:30, start deciding how I was going to feed my head and start my day. And it really started to domino from there.
No, I think it's interesting. It's definitely something I personally struggle with. I've always been more of a night owl, stay up late until, the wee hours of the morning. I think I just naturally trend that way, but I do notice that when I, do get up early in the morning and do things and set myself up, I have a significantly more productive day than if I just get up at 6, 7, 8 and, now it's just roll out of bed and I'm 10 steps away from my office. But, prior to that, it's even still, the amount of stuff that you set up, get ready to go, is significantly different than just rolling out of bed and going. is there anything, it sounds like you do some reading or learning in the morning. Are there other things that you do in the morning that you find especially helpful?
So yeah, it's definitely the reading thing, and then spend some time just in thought, because I think thought is the most difficult thing for a person to do. Constructive thought.
Hmm.
You have to, and there's a book by the name of, but it's the book I recommend more so than anything else other than scripture, which is it's called The Master Key System by Charles Hannell. It was a correspondence course back in the early 1900s, and it basically trains you on how to control your pattern of thought. And that's, to me, was one of the biggest keys to me being able to control the rest of, have as much control as I could about all the rest of everything else out there. But after about an hour of that, then I go straight to it. Since my body's been so beat up, I've broken over 50 some odd bones in my life, and I have to keep making sure that it's mobile. I go straight to a mat, and I'm stretching everything out for 15 to 20 minutes every day, and then from there it's some sort of workout. I just had shoulder surgery in the last few months. I had to give a little bit of time to get back into working out again, but now the shoulder's back to where it about 80%. I'm at it for an hour to an hour and a half every day after that stretching is done. So that way I can, when I call upon my body to do stuff, it will do it because it has the capability to. So that's where I spend my time in the morning. As soon as I'm done with that, I go straight into the chair and I have breakfast made by my daughter. I pay her to make it so I don't have to waste time.
Hmm.
I come straight into here. I'm either on a call or on a podcast, or I'm working on business, or I'm expanding things or getting some other thoughts done, or I'm recording twice a week for my clients, what's going on in the market, what to expect going forward, at least my anticipation. And then I'm working on the next YouTube show that we're going to film, what we do once a month. We have 4 guests once a month. We go out either rock crawling or bow fishing or fly fishing or long range shooting. And after a day of goofing off, we get around the fire at night and we find out what is that campfire story they have to tell about their life.
That's interesting. I like that premise.
Yeah, no, that's awesome. From a standpoint of that it's laser focused, right? I'm sure you take that over to the business side. Are there loans you guys don't look at? I know you mentioned earlier what your average transaction looked like, but are there deals that come in? The legality side of it, I'm not aware of, but is there, we do $80,000 loans better than anybody, or if it comes in, you guys work on it, or your model is very specific to your location, product size, whole 9 yards.
Well, there's some specificity when it comes to location. I'm licensed in 26 states, so I can't just go out and do it anywhere. And the specific products, right? It's conventional lending, right? And I focus on real estate investment. Now, investors, I'll do their refis on their primary residence because they're going to use that to buy more properties, sure. But for the most part, I don't work with first-time home buyers. I don't work with home buyers and stuff because I don't even know the programs anymore. It'd be doing a disservice to do that. I don't work with realtors. There's people out there that focus on that. I don't. What I do is just work with the people who's buying investment properties, and it doesn't matter if it's a $67,000 purchase or a $300,000 purchase or $400,000 or $500,000. If it's an investment property that fits in Fannie and Freddie guidelines, then we work on that. That's where we focus all our energy at. And outside of that, I mean, there's a lot of things people do, like the fix and flip stuff. In our world, we'll do refi and purchase. That's where our focus is, and we can't even meet the demand for that.
Mm-hmm. So because I think that's a problem that a lot of people have as well, that you just touched on, of having a criteria or having a product or niche that you kind of stick to. How do you guys stay in there? Is it just too much otherwise? How do you view, like other types of loans, whether it's, fix and flip or, I don't know what else there is on the residential single family side, but why have you guys not done that? Is it just nature of deal volume or something else?
Well, I discovered early on in my career, when you try to be everything to everyone, you become nothing to no one. Mm-hmm. You get scattered too much where you can't accomplish anything, and you start stumbling into the deals. And then in that stumble, you make mistakes. And those mistakes, it costs a lot. So I had to figure, okay, what do I want to do? What am I good at? And where am I going to focus my energy? And you have to start weaning off the other things, and it hurts. Mm-hmm. It's painful to decide what your niche is and dig into that niche. And I had to decide, when I did that, I went from, basically a rut that was a mile wide and 8 inches deep to a rut that is a mile deep and 8 inches wide. And that was hard to do and bring that in. But once you start getting there and then the world starts to know who you are. from just being known by a handful of people in the state of Arizona to now being known across the country, across the globe. I got real estate investors across the globe calling me and sending me texts because I've been at it for 23 years. Eventually people catch on to it, but you have to be consistent. You got to be consistent and persistent, and you got to not stop. And it's not swift, but it's definitely certain. But it's painful. And the one thing I'll tell you, the goals that I've set for me are unachievable. The directions that I'm heading and the way I go about my business, nobody can duplicate, because when they see how steep, how rocky, how many poisonous serpents are on this and how difficult it's going to be, they're going to start on and say, hell with that. Why would I want to follow that guy when I can just do this over here and continue to pay my bills? Because I decided to make it that tough on myself, therefore making it tough on anybody else to participate. Now, does it mean there aren't going to be people that will? There are people that have that kind of guts, that kind of thick skin. They'll come after me and they'll keep going at it. But there's so much business out there, I'm never going to feel it as long as I don't end my own business. I'm the only person that can kill it.
I love that. No, I think that's super powerful. And I think it's a good way to look at it. It's a really good abundance mindset, as well as really strategic on your part. So I think a lot of people will take away from that. But I think that's a really good place to wrap up. Aaron, can't thank you enough for coming on. I think this was great. I definitely picked up a few things I'm sure anybody listening did. So I know you already mentioned the YouTube channel, but if people want to follow along, learn more about you, get those books, whatever, where can they do all that?
Just go to aaronbchapman.com. So that's where they can find me. If you want to do the book situation, so you can actually just Google Aaron Chapman. You can find it, right? If you can go to Amazon and just type in QJO Initiative, as is Quit Jerking Off Initiative. That's the name of the book series, if you will. I thought that up as in battling with some folks out in Washington, D.C. about some stuff. They're so-called initiatives, and we need to have one where you're Quit Jerking Off Initiative, and that's where it all came from. Then of course the YouTube channel and whatever else, but Google will help you find all of it.
Yep. Yeah. You can always fall back on Google, right? So guys, definitely go check it out. I know I am as well. Especially the YouTube channel. I think that series sounds super intriguing. So definitely gonna
check out episode 10. I had the opportunity to sit in a hunting blind with Adam Vinatieri and talk about his life and where he came from and all that while we were hunting deer.
Awesome. Definitely going to. Guys, thank you so much for listening to this episode of the podcast. If you're not already subscribed, it would mean the world to John and I if you would do so. And if you are, please send it to someone who you think would get a tremendous amount of value from this episode. Aaron, once again, thank you so much for coming on, man. This was great.
Thank you both. I appreciate you guys.